Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 10th of March. ECB meeting. What will they do? The main event today will be the long-awaited ECB policy meeting. At the latest meeting, ECB officials kept rates unchanged, but in the press conference following the meeting, President Draghi said that the bank will possibly reconsider its policy stance at the next meeting in March. Conditions have worsened since then, as Eurozone's inflation slipped into the negative territory, while the five-year inflation expectations plunged to an all-time low of 1.38% in February. Investors currently expect a 10 basis points rate cut at this meeting, but with regards to what other tools may be employed, the market looks to be divided. The available tools include extension and/or expansion of the Kiwi program or technical adjustments to the existing purchases. We believe that the situation is not dire enough to call for an expansion of Kiwi, as the bank would need to purchase riskier assets to achieve this. Given that the ECB will not want to sit back and risk a deflationary mindset being entrenched either, we believe a deposit rate cut and an extension of the existing program could be the preferred path for the bank, and the one that would most likely gain the support of the Governing Council. At this meeting, we will also get the updated forecasts for growth and inflation, which we expect the bank to revise down. That said, we have to warn that the risks of this meeting are titled to the upside for euro. Markets already expect substantial action based on Draghi's recent remarks, so if the bank under-delivers as it did in December, we could see the euro surging again. While the initial reaction in the euro is likely to be determined by the rate decision, the tone of President Draghi in the subsequent press conference could determine the overall direction of the common currency. In order for the euro to plunge, the ECB has to deliver a larger than expected cut in the deposit rate, while Draghi will have to keep investors alert that the bank remains willing to act again if necessary and that there are no limits on how far they can go within their mandate. Yesterday, the Kiwi plunged 140 pips against its US counterpart after the Reserve Bank of New Zealand cut its official cash rate in a move that surprised markets, but not us, as this was our base case scenario. Officials noted that the motivation for the decision was a fall in inflation expectations, threatening to become self-fulfilling and to lower actual inflation, as well as the increasing global financial volatility. The bank also reaffirmed its desire for a weaker New Zealand dollar and stated that further easing may be required to ensure that inflation moves towards the target. As a result, we believe that the Kiwi is likely to remain under selling pressure, at least in the foreseeable future. The Bank of Canada remained on hold as was widely expected. Officials took the sidelines in anticipation of the upcoming federal budget, which is expected to unveil massive fiscal stimulus. They also noted that financial market volatility appears to be diminished, but the factors that pushed inflation to 2% will likely to unwind in the coming month. The loonie strengthened on the news and continued to trade even higher in the following minutes. We expect that a significant budget increase on the 22nd of March could increase speculation that the bank will remain on hold for longer, and this could keep the Canadian dollar supported, especially given the recent recovery in oil prices. As for the indicators today, Germany's trade surplus for January came in somewhat below expectations, while Sweden's PES unemployment rate for February declined. Norway's CPI rate for February is expected to have remained unchanged at 3% year over year, above the Norges Bank target of 2.5%. We believe that this is mainly due to the weakness in NOK during last year. As a result, we expect that policymakers and investors may not read too much into this, something that could keep the crone's reaction somewhat limited. In the US, initial jobless claims for the week ended on the 4th of March are expected to have declined, but the 4-week moving average is expected to have risen. Besides President Draghi, we do not have any other speakers scheduled for today. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, wishing you solid trading.